Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:19 a.m. Central Time, and I'm recording this in preparation for the market day of September the 30th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's see what we've got going on in our morning report. At the time of this cut, the S&Ps were up about 24 points, or about 1.25%. Russell's up almost 1%. Nasdaq's up almost 1.5%. And the Dow up about 1.2%. Crude oil down about 0.25%. Euro down about 0.4%. Bonds down about 2/3, and gold down about 0.4%. And overseas action, it is all black all across the board. China up 0.5%. Hong Kong up about 1.4%. Japan up 2.7%. Germany up 2.4%. United Kingdom up 2.1%. So very broad-based bullish action coming in across all the futures markets around the clock. In terms of macroeconomic reports for today, got a pretty big slate, and part of this is probably leading into some of these big bullish numbers that we've had from the overnight. In terms of the U.S. for today, you had the ADP non-employment change, non-farm employment change, to get that out right. That will be a leading indicator into our own monthly employment report on Friday. We have FOMC member Dudley speaking early this morning. And we have Chicago PMI and crude oil inventories. And then late this afternoon, Fed Chair Yellen speaking. So quite a bit on the slate. Tonight, also FOMC member Brainard speaking. So quite a bit of activity all the way around. In terms of current volatility, and we certainly have had volatility of late, short-term VIX came down a little bit. It's no longer above a 30. It's at a 28.56. You notice the trend also came way down yesterday. Skew still up in the warning area though, 136.71. What that does for us is it tells us that the probabilities of a multi-standard deviation move are relatively high. In terms of IV percentile, 52, 52, 53, 57, so all pretty much hovering around the annual mean. In terms of standard deviation moves, no standard deviation moves were put in yesterday, though the day before that, obviously, we had significant moves across all four indices. Let's take a quick look at the charts. SPX yesterday, and you see very much a doji type pattern here. Normally, when you see something like that, tail on the bottom, that's bullish. Slightly green body, but that's not as important so much as the pattern. And then our look for today will be confirmation that this is indeed at least a short-term reversal pattern. Now you notice this last hammer here, it needed confirmation. Well, it didn't get confirmation, and indeed failed miserably. It's not just about the first hour either. And while right now we're up some 24 points on the S&P futures, and we would seem to be opening way up and in big gap up, and that would be an early confirmation. That's just the early confirmation. That's not the confirmation. The confirmation is a close. And so we'll certainly be watching today's activity. We've been talking about an expectation that at some point we would see a retest of this low, and I've been saying that, you know, probably within 1 or 2% of that area. This could be that retest, and that would certainly be easily close enough to be able to say that it counts. So this could be the retest, and we could at this point see the markets move higher and perhaps even as high as all-time highs. Now, the real question is do the bulls have the energy to not just make another bear flag and roll over to another swing low and go through this level this time, or do the bulls have enough momentum to be able to actually get their wits about them and go all the way not just to this level here at about 2018, but to be able to get past that and really restore the damage, the technical damage that was done in this breakdown from the prior range. So this right here will be a very important area. Well, I should say, let's stack this first of all. This right here will be the first test. If we can get back up to this last swing high, which was a lower high, if we can get past that, that's the first test. The second test, can we get past this? And then the third test would be to get back into the prior range. And then the last test would be to go for the all-time highs, and can we get past that? So those are the kind of the lines in the sand, as it were, that we're looking for. First test right this morning, of course, is do we actually get a bullish confirmation and get that confirmed with a daily candle, not just an early morning, though we're very encouraged by early morning confirmation. Is there something here to where this test that everybody's been waiting for, the prior lows, is satisfied and now the bulls take over? If none of those things confirm and we start to see weakness come back in, then we are likely to be heading into something a little more ugly and longer term. A break of this area will almost surely see a fall back to the last October lows. They're not that far away, only 45 S&P futures points. And surely a significant break of this area will see us drop down into this 1820 area, and we can revisit what potentials are if we should get past 1820, if we start talking about a real break of this 1866 area. So some very, very interesting patterns developing here, and we have to see just where all that takes us. Russell decidedly bearish though, and this is definitely not helpful to that picture of the bulls. Now, of course, the Russell is up right about 1%, and note that of the four broad market indices, it continues to be the weakest. So even when things are up, it's up the least. So not terribly helpful there. NASDAQ, of course, has been in a relative way the strongest, and you see it didn't get anywhere near that August low. And then the Dow also nowhere near that August low. So the S&Ps, which is the most important index, certainly had a very, very weak pattern coming in and testing those lows. So we'll see where all that goes. In terms of our regular daily report, it can't frankly get much more bearish than it's getting in terms of these metrics. Especially across the portfolio investor posture. IBD status, market and correction, accumulation distribution for both the S&P and the NASDAQ is an E. It doesn't get any worse. GMI index 0 out of 6. That author is still in cash. Primary market condition is still strong bear. New changes here, the decisions point scoreboards, more down red arrows. So now short term, intermediate term, long term, on all the boxes, with one remaining up arrow remaining, and this is the PMO signal on the Dow. And took a look at this chart, and it is on the verge of turning into a red arrow. So there are very, very few green arrows remaining, and certainly the consensus across all of this remains quite bearish. Intermediate term market posture is very bearish, and with yesterday's action, actually the S&P dropped below a 20, 19.7, very bearish. Also Russell 16.3, very bearish. Dow still holding on into the bearish category at a 36.3, and the NASDAQ as well at a 44.3. Now remember, oftentimes it is these kinds of setups that we will see at the bottom and a turning point. So it looks ugliest just before it turns around. So the question remains, does it have enough to turn around, or is this just a continuing deterioration, and what we'll see in this becoming more and more bearish, and really following through to new all-time lows in terms of recent action. In terms of position sizing opinions, long side exposure due to a portfolio position sizing opinion, a 0. In terms of volatility for the active trader, up to 50%. So kind of keep that in mind. Hedge warning status remains 2+. And you know what? With this dropping below a 20, make that a 3. We'll have to update the website there. So this should go to a 3 with this condition. Now again, that means that risk levels are significantly elevated. Does not mean that market's going to go down. Indeed, we may have already seen the bottom yesterday. And just when conditions and the risk get at their highest, if the bulls are truly able to come in when it's most critical to provide support, that's often when it happens. And we've seen that repeatedly, especially in 2015, where risk would become a level 3 just to see it turn within a day or two. So that is not unexpected at all. We're talking about how much risk is in the market condition. We're not talking about prediction that we're about to drop another 100 points or anything like that. So just kind of keep that in mind. We need to see those confirmations, though, to be able to reduce these risk levels, and that is a long way from happening so far. Indeed, you look at some of the individual metrics, volatility, it's just about as red as it gets. Market and decline warning, sharp increase warning, the VIX spike is present. You have a ratio warning. You know, these are all different ways to look at volatility, all telling us in their own perspective that, you know, elevated risk conditions are present. The skew, of course, is above a 135. As we mentioned, we're below a 20 on the market posture intermediate term. New highs, new lows yesterday, only 44 new highs against 951 new lows. The intermarket risk aversion indicators are all 5 strongly risk off. So if this indeed is going to be a turning point from yesterday into this morning, we've got a lot of technical damage to heal. And at this point, you know, we hope for the best for the bulls. At the same time, our indicators are all telling us that we should be prepared for continued downside action. The risk is very, very elevated for just that to happen. Special opinions, no change from yesterday. Very, very much questionable as to whether you should initiate any kind of new positions on the bullish side at this point. Now, conditions can change in the next day or two, and we may start lifting some of that. But at this point, it looks decidedly like any rally is probably going to be met with reloading by the shorts and other bearish strategies, and with an expectation that you just take it down again. In terms of sector-specific market postures, you see only utilities holding up in the short and intermediate term. We've got green there. Everything else is all red at all time frames. Percent change yesterday, a better day. Many of the sectors were positive, with the exception of consumer discretionary and information technology. Interesting enough, in some individual examples, some of the best companies that are holding up are in this consumer discretionary area. If not consumer discretionary, we've seen a number of the consumer staples that are also holding up. So kind of keep that in mind. But again, keep this always in perspective. 5-day, 1 month, 3 month, year to date. This is a sea of red. And you have to say that the consistent performance has been down, down, and more down. So obviously at some point you have a bottom, and you've got to be able to be prepared to take action against that. But right now the bias is clearly to the downside. In terms of the upcoming course, this has been our special announcement that we've been sharing in recent days in collaboration with the Chicago Northwest Burb Trading Club. A 40-hour course, self-directed active money management, has been made available. This will be a 10-week course, 4 hours each session, plus some bonus materials, 43 hours altogether. It's the 9th time that our friend Nick Bosco has taught this course, so he's got it well dialed in. It is against various topics of interest for the self-directed investor and those seeking to trade for a living. And this course will start on Saturday, October the 10th, and run from 9 to 1 each day in the Chicago suburb of Schaumburg. It will be simulcast to the web, so those that are not able to attend in person can absolutely participate in every aspect of this class. If you want more details, look at the course description and to sign up. Here's the web address. Just type that into your browser and that will provide you all the details that you need. In terms of what we're doing each morning, if you like what you're getting here, if it's helpful to your trading, we greatly appreciate you retweeting us to your Twitter followers, your StockTwit followers. Obviously we're on Scootify, all the different platforms. Like us on the YouTube, subscribe to us on the YouTube channel. Email support at falconglobaltraders.com. More information about what we do is available at this website. Disclaimers as always, hit the pause button if you need more time to review this. And we'll look forward to seeing you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.